Good morning. My name is Scott Rudd, the Chief Strategic Officer at T3Live.com. Welcome to Tuesday's recap. What a day. Lots of round trips. We came in, market squeezed pretty much anyone left over from being short the prior day. Once everyone threw in the towel around close to 10 o'clock, then all of a sudden the market started to fade and market went to lows, and then what happened? We held support and then rallied all the way back up. So two-way action, trader's market, trading the ranges, finding the relative strength, trying not to be too early, trying to be calculated. Those are the type of things that are working. And I know it's hard to sink your teeth into things considering that we've seen such weakness in high beta names, in the bio names, in some technology names, and you have the S&P just holding up here. It is what it is. You know, if you shorted at 10:30 when it looked like we were going to break based on some of the other names doing that H pattern and rolling over, you're probably frustrated the same way if you said, okay, now I could buy stocks at 10 o'clock, and that's when they faded to the downside. It's not that easy, and it's not, and it's a bit frustrating. So when you're frustrated, you do a little bit more, but there were some things to do. There were some pockets of relative strength, and there have been some trades working out. First, take a look at the SPX, just to get a snapshot. Here is that intermediate trend. This is when it got tested after breaking this accelerated trend to, start the year. Now look where we are. We're wedging. So nobody really wants to be caught in this if we were to break to the downside. And I understand it. Neither do I. And some are saying, you know what, the only reason why the S&P is up because the end of the quarter is coming and they're trying to market. I don't know. It might be. At this point, still holding in there, hugging the 8 and 21 day. It's definitely wishy-washy. But if we were to trade through 1873, I'm sure it might be a little hard to stay short, and then you have this, this reversal point from Friday, and then you're at highs. If you look at the Qs, yes, they're still weak. You still have this, head and shoulders type of pattern here, where it just came up basically and retested the neckline and didn't really reclaim it so fast. So now, if it were to hover here for a few sessions, it could continue lower. So we'll see what happens there. As far as the bios, no real bounce yet. It's definitely a bit oversold, and some of the bios did go green. Here was, the spot where you could have got sort of out of the way when it broke here or came back up and broke again. Then you had this small trend line there and this more of an intermediate wedge, and here you are now. So for today, it held above the prior low. Let's see what happens here if some lower type wedge puts in place. If it just continues to go sideways in here and can't bounce, you might have a bear flag continuation pattern, or it might try and retrace a little bit and retest here. Who knows? At this point, doji. Above this, squeezes higher. Below this, get out of the way. That's what you do know. Guild gave a trade in the morning, and then, which was the strongest one yesterday, so I guess it makes sense that it actually was able to go above yesterday's high, but what did it do? It failed at resistance. In the morning call, I tried to talk about what could happen if we trade above Monday's high, where is resistance 1, and a lot of these things did not make it further than a resistance 1. Some didn't even go green. Celgene, I'm not sure what that did. Went green, but still below some pretty big resistance, so not giving you much of a compelling bounce or a feisty bounce, but a bounce. So we got to continue to be careful there. It's below the 200-day. Amgen, what'd that do? Just nothing. Still below the point. Nothing great there. And then you go to high beta tech. High beta tech. Some names went below the prior low, came back above, and went green and pushed and gave you tactical trades. Some of them didn't. First one being Google. Google actually, gave you a decent trade. It looks like it closed red now, which shows you have to take your trades. Still not, showing you that it's ready to get up and go back above resistance. So it's hovering below. The longer it hovers below this prior support that now becomes resistance, perhaps it does go lower. So stay tuned. This is when it broke the 8-day right here. So if you trade momentum names for when they, hold their 8-day, once they, my mouse is a little broken like some of these stocks, that was your out. And now we'll see what kind of bounce. If you want to just look at, the 3-minute chart for tradable action, because a lot of guys trade tradable action here with Google. Here was the low. I'd say this is really where it, you got a nice little trade from 1156 all the way up to 1162. Came back, retested 1164, and then pretty much just trended down the rest of the afternoon. So Maybe tomorrow you'll see what happens. So far it's still holding a little bit above. Maybe there's another trade there tomorrow. But this was a pretty feisty break of this descending channel here to go green and give you an extra push. I know Sperling, I think he was on top of that. Priceline did a little bit of the same. Look at what Priceline did. I know it's an expensive stock. It also, but again, round trip. Here's your tight wedge. Here's where it held in there, woke up, and then went from 12.20 to as high as almost 12.35. So $15 on a 3 to 5 minute chart, but then it came back in. So if you added, you are frustrated like everyone else. If you played a trade when it broke out above a 5 minute or 15 minute range, you got paid and took it off. For me, I went with Netflix, and Netflix was the worst one. Netflix did come back up. It never broke, made a new low. So it did get a little exciting where it felt like it was going to go green like the rest of them. Right here, it got a little bit better. And then, I did add a little bit here. But you know what I did? I added there, thinking it can go green, thinking that it could go at least positive like some of the others. And what happened? Boom. It did not. So wound up getting me out. And yes, I could have taken it home as a swing because it never broke the low. I just said, you know what, this is still weaker. Not much of a bounce here. Here's when it broke this trend line with the 8 day. Here when it hovered below, right in here. And then there's your continuation as of this point. Still doesn't seem like it's just ready to get going yet, and it's hovering by the gap, so I would just kind of stay away. In the beginning of the day, my thought was to short Tesla, maybe a retest that 227 area. I got in a little early, wound up making some peanuts, but it shows you this too. If you were too early, you kind of got squeezed out. If you waited and said, I'm going to give it, for the retest, you actually made some money. Okay, and still, this is looking pretty lethargic. You still have a big downtrend here. It's not bouncing the way it used to bounce, so you still have to be careful. But if you go to the 3 minute, okay, it did open up, okay, right here, okay, and once it hit the 227, which was part of the plan to get short, little flag, boom, 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 before, putting a little red dog reversal on the 3 minute there. But anyway, could have been a nice trade. And then you had Facebook. Facebook, we talked about a few things that could happen, especially when it got closer to the open. I'm like, Facebook probably could retest the breakdown of that 66 level. So if you want to try and be long, try it for there. I actually tried to get long. And then, people are like, oh, this is the retest, Red Dog. I'm trying to short here around 66. I'll give it 50 cents. And Facebook also wound up going, where did it go? Oh, what a coinky dink. Okay, this is on the 5 minute chart, traded above, went as high as 66, 66.20. If you look for topping tails, there is your topping tail, red dog reversal. If this was a daily chart after a multi-day move, that would have been your short little advertisement. And then you saw some consolidation, didn't bounce back, went lower, and it wound up going negative before reversing back up a little bit. You go back to the daily chart, and all in all, didn't really retake this neckline, and the longer it stays below it, maybe the higher the probability this continues to the downside. That's why I think you still can't be doing anything too big in these names besides take trades, and there are definitely trades to be taken. You could have made money from the long side, about $1 and change on the first 15, 30 minutes, and then you could have said, I'm going to short here and give it a little space until the moving averages and made money there too, and now it's a doji, so we'll see. Apple actually acted much better. I'm still long Apple. I stayed in Apple all day. Here's your gap up. And then it went through 540.50, which I talked about in the morning, and now you close right into this resistance zone. So it'll be interesting to see, what happens here. Typically, Apple usually, if it goes up the first half of the week, it stalls on a Wednesday, which could be tomorrow, and then they pull it back for option expiration. Let's see what happens. Maybe they try and push it through 550 a little bit, then come back to it. Either way, strong day for this stock. Nice reversal on that Friday. If you remember, if you were sleeping, you missed it. It reversed into someone maybe knew the Barron's article was coming or the Comcast, whatever it was, and boom, nice 3 day move. Everyone says, why do you continue to, like Apple and keep it on the radar? Because when you get 3 day moves like this, it's nice. We saw that many times last year. We saw that here. Boom, this was a nice one. It got a little choppy and then went. Then you saw it again here when it got a little choppy and consolidated a big move off the lows and went. And now you have a bigger wedge, so you would think it can continue. So I'm going to try and stay with it as long as it does, and here's your next spot. We talked about what? First one was 446 to 551. Well, it got to 446, and now we'll see if we could get another update there. Microsoft is getting a little choppy up here, but it's hanging. So I would stay with this as long as it stays above the 8 day. Intel made some news that it's trying to get into wearables, which could be exciting for Intel. All in all, this was the breakout trade we talked about, and now it's flagging, so maybe it can continue, considering that it's trying to innovate and there's a lot of cash and there's a dividend, and they're saying that everyone likes mega cap, so maybe it does. And then the surprise today was this. Not a surprise, but about a week ago, if you come to me, Gregory, you knew that we were trading a lot of the fuel cell names. And they had a parabolic move up through $10, $11. Got very exciting. Everyone wanted to be in them, and then they reversed hard. And then since then, they've been coming in, and they started to get really tight. And I think on Friday, maybe some sales traders, some people thought maybe some kind of news could come soon, and it went back and forth a little bit. And then finally, technically, today it triggered and didn't look back and traded massive volume. I know Sperling was in plug a little early. I was in it earlier in the day and I lost. And then I didn't say, oh, I lost early in the morning, I'm not going back to it. It then triggered above a price point that I knew and said, okay, now I'm in it. Now the volume's coming in. If you look at plug, that was right here. Okay, plug was a really nice trade for us to start this year. It traded perfectly technically, where you had a nice move right there. Continued, flagged, continued, and then you had this crazy outside reversal. Remember, I couldn't get short, so I had the puts, and boom. Then what did it do? It got really tight. And in actuality, what did it really do? It held this prior breakout area. So then the pivot for everyone who was short was somewhere between this 623 and perhaps 657. And that was the clue that this time it could go. And even the bigger clue, if you go to the volume, was right here. Look, the size of the volume that came in there. And now, I think the news was they might get some kind of big contract in the next week or two. It's on the tape. Look at it on the tape. Google it, Yahoo Finance, maybe an auto, maybe Wal-Mart. So whatever it is, the price action gave you lots of different entries to go. And then even if you missed plug or you got in late, there were two price points for its cousins, BLDP and F-Cell, that if you said, I want to trade the group together, you had some lag time to get in there. And for BLDP, it was right here. You had this also, same type of move, broke out earlier in the year, big time reversal, get out of the way. Then it descended and consolidated. Here was your buy price right here when it went above this, what was this, 455. Nice percentage move, closing the highs, traded volume. Hopefully we get a day 2, day 3. F-Cell, the smallest one, also, volume triggered above this price point, and we'll see what happens tomorrow or the next few sessions. So that was a nice surprise, and I know a lot of us have been trying it, and the moral of that story is you could try it when it's not ready and be in there small and take little paper cuts, but then when it goes and the volume's there and it triggers, you try and get more and you try and stay with it and making your money back and then some. And in conclusion, it's been a tough tape. You've had a lot of the growth areas. You had bio, you had tech, not mega cap, high beta tech, and some others weaker. If you tried to short the spiders because that was all weak, you got hurt. You had to short the names that were actually weak versus the spiders because those names were weak. And then if you tried buying without a plan, without maybe using the RDR, you probably got ran over. And even if you tried to use the red dog reversal a few different times, it tried and failed, like Netflix, and becomes a little costly too. So we'll see what happens in the coming sessions if that continues. And then if you happen to got chewed up in Apple and then on the gap up on Monday, you said, I'm done with Apple. You know what? You shouldn't have been done with it. It wasn't ready. It held the gap at 535. It continued above Monday's high today. And it wasn't ready when you wanted it to be ready. So that's the deal. You can't be frustrated. You get frustrated and the market will get to you. If you get frustrated, you won't execute on good ideas and you'll probably lose more money on bad ideas. So you have to do what you got to do in order to stay even keel, keep a positive outlook, and make progress. There's a lot of 2A action. Last year, everyone was crying that it was a slow grind up with no 2A action. Now everyone's crying because it's choppy and there's some groups that are weak, some groups that are strong, no continuity. So if you were crying both years, stop crying. Nobody wants to listen. Wipe those tears off and get a process. Scott Riley, T3 Live. I'll see you tomorrow.